Morning, market chameleons. How's everyone doing? Day after the election day, and who is the president?
You are, Will. I
Oh,
put your
thank
name
God
in.
that's not the case. Thank God that's not the case. Wow, what a night, man. What a night. It's going to be an interesting couple days to see how this turns out.
Well, I think right now the good news is that it looks like we're going to have a divided, Senate and House, right? So if you have a government's like the checks and balances, nobody's really going to control. It doesn't look like all three. So I think that on that the market is rallying. What do you think, Will?
Yeah, I think you're absolutely right. And actually, Len sent that over earlier. He said a dividing government's a good government. So we'll see if that is the case. I don't know if you see the market behind me, but that was actually the bet-in futures market overnight. It was amazing how it moved back and forth. I mean, Biden went into the night, 85% chance of winning. Then it dropped at like 4 a.m. to Trump was like an 80% chance of winning. Now it's back to Biden. So super interesting. And we'll see how it
betting,
goes.
it's not now. You keep in the U.S. I think it's illegal to bet on it, right? This is like
Yes.
in Europe somewhere they're taking bets.
Yeah. I actually, I don't know. DraftKings says you can bet on their website. I have not looked into it. I know there was a $5 million straight election win bet, 5 million to win, I think 15 million bet on Trump the day before the election. So I don't know if that person can hedge their bet, whatever, but it's interesting to see how the actual gamblers and traders in these markets are, as news comes out, right? How many ballots are still to be counted in PA? It's like 1 million ballots still have to be counted. So you don't know. And the switch in Wisconsin and Michigan overnight, obviously, flipped Biden and Trump back and forth. So
Yeah, that's interesting. How do these futures get created? Is that something DraftKings just creates and from requests? Like, how do they even get created? These
you know what? I haven't looked into that. I do not know. It was actually sent to me by a friend at 11 in the evening that had moved and got me out of bed, and I went down and started to watch a little bit. I mean, you start going down that rabbit hole, you can be up all night. I eventually went to bed at like 1. So anyways,
so it's pretty volatile, right? Like
it is really volatile, and
volatile.
the futures market on the equities moved overnight as well.
They're moving around too.
So anyways, let's get this disclaimer out of the way, and we'll get started with what's going on in the morning.
Yep. So everyone, good morning. Thanks for joining us. Before we get started, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to provide you with guidance, provide you with the information that you need. So there's the disclaimer, everybody. And with that, let's just take a look what's going on in the pre-market hours. And just let me know if you see my screen yet, Will.
It's good, looking good.
Okay. Let's take a look. These are stocks that are moving into pre-market hours before the market opens. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look. First, let's filter this report by market cap, and I'm going to use this market cap filter and look for stocks that are $20 billion market cap or higher. So here we go. We got Uber here. I think also Lyft was in there too, right? Or they're not quite $20 billion. Let me just take a look, because I think Lyft was there as well. And they had
Lyft and Uber were affected by a proposition that was passed in California that they don't have to put all their employees on the books as full time, correct? Something like that.
Right. So I know that they were battling that out, and California wanted them to treat drivers like employees. They said they can't really, or it will change their entire model. Looks like they got some favorable ruling over there. Lyft, so Uber up 12%. I think Lyft was up as well, around 12%. I don't see it on here right now for some reason, but they're up as well. We see technology stocks up today. Apple, I think the QQQs were up. Here we go, 3.7%, bouncing back hard. SPY up 1.8%. So far, pretty positive open. We got in this list of $10 billion market cap or higher, we got 121 on the made the percentage gainers list, 15 so far on a percentage decliners list. So very favorable to a positive opening, positive day. Let's take a look at the unfiltered list really quickly. See if we see. So there we go. There's Lyft. Okay, so that's $8.2 billion market cap. That's up 15.7% on 2 million shares trading hands. I don't see anything. I see a couple low cap stocks moving, but on not a lot of shares. 49,000, 20,000 here. Not anything like sticks out at me right now. So unless anybody has specific questions.
Well, it is interesting seeing Lyft and Uber that the market didn't get it better going into this election. But I guess like most of the polls, they were so off. I mean, the fact that there's a 12 and 15% move in the stocks because of the proposition being passed, it seems like they were so far off in knowing.
Yeah, so here's Lyft. This were closed 26.23 right now. That's trading $30.45 in a pre-market, up 16%. And these two stocks, I think they're one of those companies that are still run by the original founders, correct? Well, Lyft, Uber,
Uber is not, but Lyft is.
Okay, right. Yeah, I think I remember seeing Lyft on there. It was a pretty interesting guy. There's a podcast he gave an interview on. I'm trying to remember the name of the podcast. Something like How I Built That. Does that sound familiar?
Not to me, but I'm sure it was a good podcast. You mentioned it.
Yeah, it was a pretty good podcast. He's talking about, how they're changing their models. He was talking about this proposition in California, how they're getting into other things, because Lyft and Uber, they're technology companies, really, right? It's not like taxi cab company. They're really like the technology behind the whole thing and the way that they think about technology and stuff that they're doing. I think they're also getting into like bicycles. They're renting out bicycles now. And, Uber has that delivery system. Anyway, very interesting. But
Uber Eats.
Yeah. So you could just see how they're kind of thinking and how they see the future and how they're going to apply that technology, because it's almost like a logistical company, right? With the way that
they are. Yep.
Yeah. Anyway, up 16% in a pre-market hours on 2 million shares. This is the range. It's traded $28 to $31. This is how the pre-market chart looks like. Obviously, here's some news that's driving it. We're talking about it. Let's just take a look at what Lyft tended to do after gapping up and having a big gap move up in the morning. So these are the 12 largest opening gap moves in the last 3 years. And we see here, these are the dates, and we could see the market was also up on those dates. So these are the notes here. These are the percentage gap moves on average, 6.4%, with a high of 9.3%, which was right over here on April 7th. So today, way above that, 16% move to the upside. This is what it tended to do after opening. From the open to the high of the day, the average move was 5%. From the open to the low of the day, the average move was 3.8%, so skewed a little bit more towards the upside. By the end of the day, from the open to the close, it looks like 50-50. Half the time it was higher, half the time it was lower, average gain of 0.7%. So that's the price action analysis in Lyft after a large opening gap move to the upside. But again, today, pretty good news out there for it, and a big move to the upside, 16%. Let me take a look. Were there any symbols that people were putting up, or should I just go straight to the earnings?
I'd go straight to the earnings.
All right, let's take a look at upcoming earnings. We're going to take a look at stocks that are expected to report earnings in the next 2 weeks. So I'm going here, full report next 2 weeks. I'm going to screen for stocks that on average trade 5,000 option contracts per day or higher. So over here, 5,000 contracts or higher. And down here, we have the report. This is the symbol. This is, that's Qualcomm right now. They're expecting to report. That's today after the market close. As of yesterday, the straddle was pricing in an implied move of 6.6% in either direction. That's buying the call, buying the put at the money. That compares to a 4-quarter realized average move of 5.6% and a 12-quarter average move of 4%. So we see right now that implied move, it's 1% above that 4-quarter average, 2.6% above the 12-quarter average. The high move on Qualcomm in the last 12 quarters was 15.2%. MRO also expecting today after the market close. Let me see, what is this stock? It's oil and gas. This is a $4 stock. I'll just skip it because it's low price stock. I think this is also low price stock in oil. Expedia. So this is expecting today after the market close. The straddle was implying a move of 9.8% in either direction. That compares to a 4-quarter average move of 11.6% and a 12-quarter average move of 8.5%. So we see right now we're 1.7% below that 4-quarter average, but still 1.3% above that 12-quarter average move. The high move in Expedia is 27.4% in the last 12 quarters. MET, that's the insurance, right? Let me take a look. So that's MetLife, life insurance. Today, after the market close, it's expecting to report earnings. Right now, the straddle, as of yesterday's close, was implying a move of 5.2%. That compares to a 4-quarter average move of 2.8%, and actually 12-quarter average move 2.8%. So we see right now we're 2.4% above the 4-quarter average and 12-quarter average. The high move on that is in the last 12 quarters was 5.9%. Let's take a look at what is this KGC. So we got a bunch of them coming out today after the market close. So okay, this isn't a gold $8 stock. Let's see what they look like. So right now, the straddle is implying a move of 6.2% in either direction. That compares to a 4-quarter average of 6.4% and a 12-quarter average actual move of 3.8%. So we're almost in line with that 4-quarter average, 2.4% above the 12-quarter average. The high move on that is 10.7% in the last 12 quarters. So let's take one of them and look a little bit deeper. Do you have any questions on any specific ones?
Well, they saw GM is coming up, and they were wondering if there were any. I guess someone saw that there was an alert to a earnings idea popping up.
So let's take a look at. So here's General Motors. That's tomorrow before the market opens, and I actually got like Alibaba here too. Yeti. So some more popular ones coming out tomorrow.
Baba could be volatile. That Ant IPO got shelved,
delayed, or right?
I don't know. There's no color coming out of China, but the Chinese regulators, and Jake, who's on the chat, may know a lot more about this. But the Chinese regulators at the last minute pulled the IPO, said they can't do it. So,
wow.
Yeah,
all right. So
it's a big deal. So it's a big deal for Baba. I think they own a quarter of Ant or some large number of the Alipay is owned by Alibaba.
So see, just yesterday alone, it was down 8.1% on that news. So you could, let me just take a look. I'm just trying to scan through the headlines to get some insights, but there's a lot of stuff going on here. But yeah, we see that down 8.1% yesterday. That's a pretty big move. That's prior to earnings, but that's expected to report earnings tomorrow before the market opens. Sorry. Let's take a look. General Motors, right as of yesterday, that straddle is pricing in a 6.1% move. That compares to a 4-quarter average move of 2.7% and a 12-quarter average move of 3.2%. So we see we're 3.3% above that 4-quarter average, 2.9% above that 12-quarter average. The high move on General Motors in the last 12 quarters, 9.1%. As an example, I'm going to go to General Motors. I'm going to click over here. Let's just take a look at it. Moving here. So here, let's take a look. These are the historical implied moves versus realized moves. These bars that you see here going up and down. So we see from 0%, then these are percentage moves up and down. I'll just hover over this one as an example. So May 6, 2020, before the market opens, we see that the actual move, it was up 3%. That's what that green bar represents. The implied move was, according to the straddle, was up or down 7.5%. So that move was more muted than what the straddle was implying. If it's down, here I'm hovering over the next one on July 29th, we see that the actual move in General Motors after reporting earnings was down 1.7%. That compares to an implied move of up or down 5.7%. What's interesting here is, like, I'm just looking at the implied moves and they're kind of like all over the place. So sometimes, you just see them, changing a little bit, these bars from quarter to quarter, but these are kind of like, up and down. So they're all over the place. Let's take a look historically what happened here. So 75% of the time, the straddle, the options overestimated the move. On average, in the last 12 quarters, the implied move heading into earnings was up or down 4.9%. The average of the realized moves was 3.2%. So we see there about 1.7% differential between the implied and realized moves. And here we could see that if you're doing the straddle just from the long side, buying the straddle, it was only a winner 18% of the time for an average loss of 25% historically. Let's take a look at the implied volatility. And now we're going to see how General Motors, how the implied volatility performed the day after earnings. So now we're looking at implied volatility in options that has 30 days to maturity. The difference is if you're playing the move, like over here, right, you're looking at the shortest term options that cover the earnings, because shorter term options have more gamma, less vega risks. So you're playing on the movement. If you're looking at the vega, you want to go out a little bit further because there's less gamma, more vega in them. So 30-day constant maturity, we see that on average, the day after reporting earnings, the implied volatility declined by 17%. So the average implied volatility day before earnings was 33.8. Average implied volatility day after earnings, 28.4. Average implied volatility 5 days later, 27.7. Here's where we stand now. We're at 51.2. So this is near the higher range. So here's the average, 34.8, 2 days to go. High was 63.8, which was over here on May 6th earnings. 2 days before that, implied volatility was 63.8. So we're definitely above that average right now. And here's how it looks on average the next day and then coming out. And of course, a lot of this also, we got like elections and markets are a little bit more volatile. So we just see in general implied volatility right now is elevated regardless of earnings announcements. So that's what General Motors looks like. Did you have a different question?
No, you can go on. I mean, someone was asking about the BABA alert option strategy detected too. I don't know if you want to walk through BABA earnings, but I mean, there's so much in this BABA earnings. Actually, Jake was mentioning he had a position on, and
Yeah.
because of this news, took it off because it's like, you know, an
Right.
event well beyond your typical earnings. You know, God only
Right.
knows what news comes out about it. I mean, Jake is saying that, you know, the Chinese banks are owned by the government, and this whole system is undercutting, you know, their revenue stream. So it's, you know, it's interesting, very interesting.
Weighs in on, right. And what we see here is that now the options, they're pricing in a different event or potentially different event going on than just earnings alone. So now, if you're taking a position here, you're taking a position not just earnings, but on this other event, which could actually be even more meaningful than the earnings themselves, right? So maybe at this point, whatever is going on here may matter even more to Alibaba's business than just, you know, this quarter's earnings. But let's just take a look from an earnings perspective. Keep in mind though that there's something else going on there, and you always have to pay attention to that. But if there wasn't anything else going on, let's just take a look from an earnings perspective. What tended to happen in Alibaba, again, these are the implied moves compared to the actual moves. So we see a couple times here it broke through those straddles, and this is what tended to happen. 75% of the time, the straddle overestimated the actual move. On average, the average of all the implied moves heading into earnings was up or down 5%. The average of the actual moves or realized moves was 3%. So you got a long-term average 2% differential between implied and realized moves. Let's take a look at what tended to happen to the implied volatility. Again, 30-day IV, 30-day constant maturity. The average implied volatility decreased 15%. Day before earnings, the average implied volatility is 38.1. Day after earnings, the average implied volatility 32.6. 5 days later, it looks like it ticked up a little bit, 33.8. So there you have, you know, what the averages look like. But again, you got, you know, right now 47.9. So this is getting impacted by earnings, probably market volatility, and then you got that firm specific risk in there, whatever's going on with that IPO. Let me do another one. What was the other one? Not Alibaba, but what was the other symbol?
Yeah, GM, and then this Qualcomm is a big one coming up. Expedia is another big one coming up.
All right, let's do.
You know, something actually Jake was talking about we haven't touched on in a while. He's looking at seasonality. He's got a seasonality play he found in PBR, which is an oil and gas company. But I don't know. It is the start of November if you wanted to show the seasonality screener for stocks.
Sure. Let me go do the Qualcomm, and then we'll go to that seasonality example. So here, Qualcomm, since we're already on it, this is what it looked like historically. The implied moves versus the actual. So you see this huge move right here, July 29th, big outlier. It was up 15.2%. Options were expecting a move of 4.9% in either direction. So that like tripled, right, what the options were expecting there. This is what it tended to do. So on average, the Qualcomm overestimated the moves 67% of the time in the last 12 quarters. The average of all the implied moves heading into earnings was 5.1% in either direction. The average of the realized moves was 4%. So we see there 1.1% differential between implied versus actual. And that's where, you know, if you're doing the straddle long term, that's why you see on average, even though over here you killed it, here it looked like it was profitable, but a lot of times it was like almost unchanged, right, where they got crushed. Let's take a look at the implied volatility, and then I'll go to the seasonality example. So here, the implied volatility day after earnings, average decline 18%. Day before earnings, the average implied volatility 36.2. Day after earnings, average implied volatility 29.8. 5 days later, average implied volatility 30.6. Okay, so do people understand like what this means by calendar spread and why we look at that and how you would set that up? Do you want me to go through an example?
Yeah, definitely.
You want to do that? All right, let's do that. I think I'll have enough time for Jake's question. I'm going to show you really quickly. So what you would do is, let's just say I want to hedge the move, right? So let's say I'm in November 6 expiration right now. To hedge the move, I'm buying the straddle, right? So 405, oh, I'm sorry, 450 and 405. That's the closest one, 125. So right now, I basically bought the straddle. You know, this is what it would look like. You know, so right now I'm long the move. Now I want to sell the move. I want to hedge that, but be short Vega. So right now, see, this is my mostly delta neutral. Doesn't matter which way it moves. I'm long a little bit of gamma, and I'm long Vega 10.9. So my objective is I don't really care about if it moves up or down as much as I think that the implied volatility is high and it's going to come in. We said on average 18%. So let's go out to a 30-day option. So what would be 30 days out? Let me see, December 11th, December 18th, 32 days. So here's 32 days out. And let's just say I wanted to just sell that, right? So I'm going to sell the same straddle, 775, 780, right? So look, I bought the straddle in the near term, sold it in the further term, right? So basically, it's like delta neutral. So this is what it looks like at November 6th expiration if the implied volatility stayed exactly the same. But we're expecting it to come in like 18%, 20%, right? So what if this came in 20%, let's say to 30, 34? I'll just put it at, is that too much? Maybe 36, right? So I'm going to say this implied volatility comes into 36, this implied volatility, because earnings will be over by November 6th. What does this look like? Where am I expected to make money? I'm going to reload that strategy. So now this is what it looks like. So we see that the stock still has to move out there, but not as much as just the straddle, right? So it has to move past these points here because you see we're short Vega. So if it moves, right, we're expected to make some money on the Vega, and it just has to move far enough for us to be profitable over here. So is this enough move? Let's take a look at the last 12 moves. This is the last 12 moves in, let me see, in Qualcomm after earnings. So here we kind of see these bars here. A lot of them kind of landed in that red. So maybe it's not enough, right? So we see a couple of them kind of landed out in the green, but Qualcomm had very small moves, tend to have very small moves. So this is where you have to kind of make a decision. If you think it potentially can make a move outside these levels, then it could be a good do. But at least according to this data, it looks like Qualcomm a lot of times moves were not big enough. 2.6%, 2.7%, not big enough. But that's how you would try to take advantage of a move and an implied volatility crush. Okay. Seasonality really quickly. What was the stock?
Well, he was looking at PBR.
PBR. So this is like a Brazilian bank. I'm going to do it from here to make it kind of quick.
I think it's oil and gas, but
okay, oil and gas. Keep in mind also this is just seasonality, just how it did historically. So you should still have a kind of bullish perspective in it. the seasonality is kind of like an extra right data.
Well, I think,
point.
by the way, he's looking at it from a bearish standpoint.
Oh, it's a bearish. Okay, so let's take a look. I'm just going to look here under tool seasonality and take a look here for November, right? If you're looking at November, historically, this is how it tended to perform 90% of the time. But from the, if we took end of October, last day of October to last day of November, 90% of the time it was lower, 9% was higher for an average loss of 7.2%. So that looks like historically didn't do really, at least the month of November, it was very weak. So that's a good find by Jake. Obviously, you still want to make sure whatever you're reading that you still have a bearish perspective on it.
My only concern looking at this trade is just these oil and gas have just been so beat up, but doesn't mean they can't go lower. But the 52-week low on this thing's $4. So
yeah, and I don't know if what's going on right now in elections weigh in on these stocks. In the oil industry, I don't know how that plays into this particular stock. But always you should go do your research and know what else is going on around this stock, before you make your decision.
So, but there is a place to go where you can screen the entire market for, that's what we haven't shown in a while, right? Where is that? Is that in?
Yeah. So you could go over here under stocks. Let me take a look here. Sorry, under stocks. My mouse is going to see this seasonality here where I'm hovering over. If you go over here, this is the seasonality screener here. Just pick out calendar month. Let's say November. Say I need at least 8 years of observations. You could look for positive, bullish, or negative. Let's just do positive. What tended to go up 70% of the time, let's say. And you could set minimum average return, maybe median return, 1%. So here we go. November tended to do well in the month of November.
How many potential stocks are there to look at? Actually, I just realized the bell just went off.
Okay. All right. Well,
you can see there are lots of things to look at and then build trading ideas around. Dima, great job. Sorry about driving you in a different direction, losing track of time, everyone. Have a safe trading day. Any last words, D?
No, thanks everybody for joining us. Be safe out there. Hope to see you guys tomorrow.